Good evening. Ira Epstein with your financial market wrap-up. And this wrap-up is for Tuesday, the 5th of April, 2022, getting on about 7:15 in the evening. So we had a good-sized break today. Want to see that. This fits in very much with the special report that I've just done on the S&P, where I cover in detail monthly, weekly, daily charts, price counts, our proprietary methodology of trying to figure out where a market might be going to, and some of the talk then on the seasonals from the Moore Research Center, and then I wrap it up with talk about what does an inversion do, how does the market react to it in the stock indices, but what's the filter on it? There are several. How many days are you staying inverted to lock it in? Very important. What happens with unemployment? Because you get another filter on that. If you're going to say it's inverted, you can invert and not get a hard landing. Out of the 25 years past for the month of April, 20 of the years in the month of April have shown gains in the S&P. 5 has showed declines. I talk about all this. So how do you see this report? And you want to just take your cursor, move up here, click the icon, and away you go with it. Now at the end of this report, I'm going to have an ad on my enhanced Bollinger Band course. And I'm hard at work on the outside day course. That's right around the corner. So you'll get another real popular tool that's got some things I guarantee you've not looked at the way that I do, and it gives you some indication of what might happen on that outside day and why they're so important. So let's just go to the marketplace today. We got up, we've been over the 18-week moving average of closes. I have been here saying I do not think this market is going to take out these highs. Said it over and over. I could be very wrong on this, and I know traders are thinking I am because the market's had a heck of a rally. But that doesn't mean I don't think there's more juice left in the market. Let's talk. We've had a big run-up. It is not uncommon that you have to consolidate that. Things don't grow to the sky. They have to pause. We're in that pause. That's why this is so important at this point in time. If you take a look at the trend, it is still up. It began here with a pattern of higher lows and higher highs. With today's action of an outside day down, you see it right here, and that number was 4588.5. That did not take out the high back here, which was 4631. So the reality of the situation is you now have a pattern of higher highs, but I could argue lower. Higher lows, lower highs. I got mixed up there. Higher lows, lower highs. So you're narrowing in the pattern like that. I then look to see where the market might go to see what's happening here. And this is just unbelievable. You've got the 100-day average, the 200, and the 18. Now, the 18 today had a bullish crossover. It got over the 200. So the support starts from the 100 down here. And you'll say to me, rightly so, hey, Ira, if you go there and you take out that low, you end up with lower highs, lower lows. No argument at all. That's what it would be. But that doesn't mean you're under that and you're plunging yet to the downside. And the odds don't favor that. Could it happen? It certainly could. One of those 5 years in the month of April over the past 25 that the market lost, it did lose 6%. That was the biggest loss it's had. Most of the losses are in the 2 to 1.5% range. If you get that, the gains are on average 2.5% or greater. So that gives you an idea of what the market does. So this is the pullback I'm looking for. On the 7th of April, seasonally speaking, lows typically form, according to the Moore Research Institute. And from there, it's a question of how far they go up in the rest of the month. When we take a look at Bollinger Bands, you haven't hit a Bollinger Band since back here. You're far away from it. So this is all about the consolidation phase that I thought the market would go in. And I want to make a case here. You can come down, get another buy signal, and get an objective wherever that Bollinger Band that is far away from where the seasonal highs are. See what I'm getting at? You don't have to get there. That's my point. When I come over and I look at momentum, you lost the embedded reading. What does that mean? Well, if you've been a student of mine and you've taken already the enhanced Bollinger Band course, remember to move your cursor up there, when this occurs and that all happens, you typically break back down into major moving averages. You're doing it right now. It doesn't have to be the 18. It's this whole zone and it's happening. Ideally, it goes a little bit lower to meet everything that it should, but it doesn't have to. It could stop right here. It's meeting the objective. Now, once it gets out of this, it gets overbought first when you lose the embedded reading. Overbought can either re-embed or typically both numbers get back under the 70 level and the game starts afresh. In the NASDAQ, and by the way, in my morning subscriber videos, I've been telling traders, don't buy here on these. I know what I said, and it's in a recording. I'll stick with what I said. And you can see why. The market coming in, and let me get here yesterday, you're at first in this market. I said, are you going to really buy into all this resistance? It doesn't make sense. That's all that I said. Nothing to do with an embedded reading that is there. I said, I'd rather pass on it and see if something happens. Well, that something is starting right now. You're losing the embedded reading. So it would not surprise me, because that's the only key moving average under the market. We go back there. Again, that's all off the enhanced Bollinger Band course. The Dow, let's come here. You were starting to lose on Monday, the enhanced reading. And the fact that you close this way, if you don't act good today, you're going to lose the reading. Good being a strong close. You lose the reading now. You have an outside day down. What do you think my target is? Come on. The 18-day average of closes. So I'm looking for this market to back off a bit more and hit that. You now got the market caught between the 100-day in green. This gray number right here is the 200 and the 18-day average of closes. Next, we go to the Russell. And in the Russell, this market gave you your warning signal before any of the others. The market started right here on this day. This was last Thursday. And it said, you can't be long anymore. You're going back to the 18-day average. Is a high probability. I don't know what things are going to do. I know the probabilities. Again, this is the enhanced Bollinger Band course. You went right up to the key number. I know what I told my subscribers, because it's all video, so it's all there. I got to keep it 5 years, so I know what I was saying. That's where I think the pros are coming out of the market. You don't want to be long beyond that. Market bounces. You feel stupid at first. Bounces again, and people will go, well, that's not so good. I think that was pretty good. Did the job. And that's where you're at. Actually, you're in a minor downtrend now. However, you're oversold already. Any reading under 30 is oversold. So as fast as it broke, and it did what it should do at the way that I teach charting, it's oversold. Not interested in it. Walk away. Then in the VIX, we've been talking. How are we going to get back down here? That's the big question for this market. Is it going to get to the blue line again, or is it going to first get back up to the 18-day average? We'll find out. But what are you doing? When you reopen in the morning, you may well lose the embedded reading. If stock market is steady to lower, this will probably jump. And if it does, I'm looking for a peak up in that area. You're at the first resistance point, no question about it. The bears are still fully in control until that red line peaks and you don't anticipate it. Let it do it. A 16 level is not like being up at an 18, 19 level. You say, I'm willing to take money off the table. By the way, I was saying that in my spider report today, my video for my spider ETF people, and in stocks. I was going, it's probably a good day, and this is at 9 this morning that I'm recording, and I'm going, I think it's a good day to lighten up. I didn't realize today was going to turn out the way that it did, so I feel pretty good for them going home. In the T-bond market, bearish, but oversold. It either embeds to prove it's got another level, or this is going to be an important area of support. And in the 10-year, it's the same thing. Now, you got to ask yourself, how much higher do you think interest rates are going to go from here? I've seen the pros say they doubt it'll be 3% in the 10 years. So between here And 3% is a half a percentage point. It's a nice move, but is it dramatic? That's the question. A lot of the drama has already taken place in this. That's the point that I'm making to you. That does not mean I'm bullish. Not at all. I think that there's more to come. I think the Fed doesn't have the markets back anymore. I think the Fed is determined to get ahead of the market. In other words, get ahead of the curve on this. So no, I don't see anything bullish other than me wanting to hope for rallies to get short still on, but I don't have a big downside target in mind. Then in the dollar index, I'm looking at a higher high, lower low. I don't see anything here. I realize, and I saw it today on TV, I'm watching Bloomberg, and they're again I think it was Abigail going, oh, this could be it. We're going back over the 100 level. Okay, that was like when she was saying, and she's a good chartist, but when Bitcoin was coming down, I heard her say $5,000. I started laughing. She were at the Bollinger Band bottom. If you understand Bollinger Bands and understand the first thrusts of them, what they do. Now, this could be a breakout, but I'd want to see more sideways action, like a spring coiling in a pipe. Get the inertia going. I'm not seeing it just yet. I'm seeing the flip-flop in the euro. Higher high to lower low. I happen to think the 109.13 area on, I think it's borrowed time. You'd have to prove to me you can crash from here. I don't see it. That doesn't mean I'm right. Okay, remember, I'm Mr. Swiss Cheese. I'm often a lot. In the British pound, I'm seeing the sideways action, and it's being confirmed by just hanging in here in, day out at the 18-day average of closes, and you're already oversold. Not on my hit parade for a trade. Bitcoin lost the embedded reading. What did we just say yesterday? We were here, and the market had lost it. I said, if it doesn't get it back, this is Monday, yesterday, if it doesn't get it back, the odds strongly favor you're going to go right back to that 18-day average. Now, I don't know if I'll be right. Here's Tuesday and here's tonight. I feel a heck of a lot better about it. That's what you learn in this enhanced Bollinger Band course. It's so important because you're going to learn stochastics with this, how to play the two. In the Brent versus June WTI, Brent versus WTI crude, sort of found the home at the $6 mark. And if you look at the market, it's been bearish. I was telling traders this morning, I don't have the guts for it. The sellers are probably right here against the 18-day average with stops right here, 112.26. So let me understand. They're selling the market up here, just to give you an example, with a $5 risk. That's $5,000 a contract. It's beyond Ira's risk tolerance to even talk about it. And I think the same thing's happening in WTI. The trend is already down. The resistance is here. You'd have to take out this number in order to negate the downtrend, and you're lining up for the potential of the lower Bollinger Band. And that's what I'm seeing in the market at this point. Trend down, bias down at this point in time. Heating oil, not in that camp. The heating oil has full divergence. You have a market with the trend up over the 18-day average of closes, and momentum is trying to point down. Walk away. Natural gas, bullish as can be, offering what I teach in this course. You go up, you come out against these Bollinger Bands, you keep buying the pullbacks, and there's a moving average you use that I teach in the enhanced Bollinger Band course where you work with that. Want to learn about it? Get your doctorate degree, as I call it, in it. You know, I'm being facetious there, but take a look. Look at this ad right now. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, If you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.